Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of nearly $79,000. That's made up of the $47,122 in my US stake portfolio and the $31,764 in my Australian Vanguard portfolio. Having a quick look through my holdings, you can see I'm up around 32.4% as the market had a pullback recently but has bounced back. I still hold the same companies, but I did sell out of some of my positions and add to some of my others. So I'll go through that and explain a bit more in depth why I did that and the goals of my portfolio still. Having a look at my Vanguard portfolio, you can see I do have a upcoming pending transaction. And if you want to have a look, I am buying a little bit more of my international shares ETF as I'm slowly getting closer to that $32,000 mark for my portfolio value. You can also see I have some pending distributions or dividends, which will be coming in this month, which is because every quarter I get distributions from my Vanguard portfolio, so that would be one of my stocks. Overall, we'll go through my stake portfolio first, and having a quick look, starting from the top is Apple. I still have my whole position in Apple. Nothing's changed with this one. I haven't sold out or taken any gains, and I'm sitting at around $4,157 in total equity, which is up 60% or $1,540. If you have a look at the last month, it's been pretty flat, but the last 6 months is really where the run-up has been. Nearly 35% in the last 6 months, and even the last year is still up 27%, but you can see it's been these last recent 6 months where the majority of the work has been done in this new year. Overall, Apple has been one that was a bit rocky. One of my favorite investing YouTubers I watch, Joseph Carlson, was talking about taking some gains in Apple, and it is something I did think of. This is actually the first stock I ever bought. Back when I first opened up this portfolio and I started investing, I bought into Apple and I've held it ever since. I've never actually sold any of my Apple shares, I don't believe, and my average share price is around $142. And if you have a look at the different analyst expectations, you can see majority are saying buy, a good chunk are saying hold, and one is saying sell. In my opinion, the reason why I've decided to hold on to Apple all through this is because of the long-term outlook of things. I don't see Apple going anywhere in the short term or the long term. I think if I closed this portfolio and never looked at it again for 5 years and I came back, I think Apple would still be generating cash. There'd still be a market dominating company with a competitive moat, and I think my investment would still be in the green. And that's one of the reasons why I still hold my Apple position. Who knows, I might take some gains and just cut it down a little bit, because if you have a look at my portfolio weighting, it's actually sitting at around 13%. I might get that down to around 10%, but a bit more on that later, as I did reallocate a little bit of funds. Amazon is another position of mine that I bought into, or I added to recently this year, and it's up around 16.3% or $217, which is actually quite good, considering I haven't had it for long. It is a position I'm potentially looking at increasing. If you have a look at the analyst expectations on this, I did a short on it today, and all 8 are saying buy. I'm not saying that obviously means you should. You should obviously do your own investment research, but it seems pretty popular, and it was a stock I was looking at for a while, and then I decided to grow my total equity. Now it's over $1,500. So if you have a look at pretty much any of their balance sheet or income, even the EPS is an easy, quick one to look at. But everything with the company seems to be trading in the right direction. And it is something I want to hold long term, like I said with some of my other tech positions. But it is a bit of a smaller one, only at 5%. So if I do reallocate some of the funds, that's maybe where I'll maneuver the funds to. Costco is actually a stock that I sold out of, or not completely, I sold half. I sold one of my shares. So I still own just under $1,000 in total equity in Costco, and I'm up around 82%, which is crazy to say. This stock has been amazing for me, and the only reason why I didn't grow this any bigger was because I didn't buy in because I thought it was overvalued consistently, but I kept holding, and it made it harder and harder to buy in as the stock just continued to trade up. As you can see, it's up 62% in the last year alone. and you look at the last 5 years, it's up 211%. The stock has just been absolutely ripping. Of course, it's traded flat for this month, but I decided to take some gains when it was in the 900s. Good time to take gains by the looks of things. Doesn't mean I don't believe in Costco long term. I think if it does trade down more, I would not be against purchasing it again. But I just felt like I could reallocate some funds. But I am quite disappointed that my allocation to Costco is only 3% now, because if you've watched some of my other videos, I always spoke about how I used it as a hedge against my portfolio just being heavily weighted to big tech. And I've kind of lost that now that I've sold out a little bit. But I did want to take some gains as well, because there's nothing wrong with taking some money off the table when I can always reallocate in the future. But taking that money, especially when it's had such a strong year, 62%, there's nothing wrong with money in your pocket. Next is Google. This is a company that I did buy into this year and grew my position in, and I'm up around 22% or $300. Had a pretty average past 6 months and month, but when you look at the year, still up 21%, but there's been a lot of disruption around Google. People worrying about lawsuits breaking up their business, and also how ChatGPT and other LLMs are going to take away from its search monopoly. In the long term, I still think Google will sort this out. They're still a dominant company. They even have their own one, Gemini. If you've used it before, I used it sometimes. I still don't think it's at the level of a ChatGPT or even Llama by Meta, but I think it is still a usable large language model. Overall, I plan to hold my shares for the time being. I don't see myself selling out of Google anytime soon. I think I'm going to do a review at the end of the year, just kind of tying up loose ends, deciding where I want my money to be. But if you compare this year to previous years, it's probably been my least traded year. I'm trying not to move in and out of position so much, because that's when you rack up transaction costs from buying and selling, also to do with tax when you take gains. And I think it's just easier to kind of look long term and try to capitalize on the long term growth of companies I really believe in. I don't see myself as a trader, and I think if I can kind of have a long term outlook, that's worked for me so far, and I would like to keep that mindset for both my portfolios. Next is JP Morgan. JP Morgan, like Costco, is a position I did take some gains in. My two staples, which I was trying to diversify away from tech, actually had two of my best returns. You can see my JP Morgan position still up 63.8%, which is crazy to say, or 450 USD. And my total equity is sitting at around 1,160. So it's been a great year for JP Morgan. If you have a look, 45% up just this year alone, which sounds crazy to say, but even the last 6 months, it's been okay, but not the best month previously. So I am happy I did take some gains when I did. It's bounced back today, up 3.5%, which is really good I still hold 5.5 shares, and my average share price is around 128. So out of the big banks, when I was looking, this was the one that I had the most conviction in. If you've been watching my channel for a long time, I did actually invest in Goldman Sachs back in the day. That was a stock of mine that I had some money invested into, but I decided to sell it, and I put all my money into JP Morgan. Overall, I don't think I'm going to sell this right now. Maybe in the future, again, at the year mark, I review my portfolio and decide I want to move funds elsewhere. But it was the same thing as Costco. I got to take some money off the table, lock in some good gains, especially when the company's had such a strong year. There's nothing wrong with money in your pocket, like I said. Next is Microsoft, my biggest individual stock holding. That's not an ETF, and it's sitting at 18% of my portfolio at the moment. And it's up around 27% this year. And my total equity is around 5,654 USD, which is 13.5 shares. And I'm up around 32%. The reason why my total returns on this is a bit lower is because my dollar cost averaging in. Unlike some of my other positions, this is a position I've been growing over this year and last year, especially, even some 2022, where I've been dollar cost averaging in, which is bringing obviously my average share price higher. It's sitting at around $314 now, so it's about $100 a share cheaper. Overall, it is getting a bit large as an allocation. The goal was to probably keep it around 15%, but again, when I have a look at the stocks I hold, it's one that I have arguably the most conviction on, especially out of my tech positions. So when I look long term with this, same way I look at Apple, if I was to not look at this portfolio for a few years, this is a position I think would still be there, still generating cash flow. And like Costco, I've said for years, I think these two companies have the best business model in terms of recurring profits, strong, stable returns. I just think Microsoft is a great investment to hold long term. And yeah, that's how it's grown to be nearly 20% holding in my portfolio. And the last one to finish up is VOO. So this tracks the S&P 500, and it is my biggest individual holding by far. So it's $16,576. Keep in mind, this is all USD. So if you transfer this to AUD, it's probably over 20 grand now. And I have 31.47 shares, and I'm in the green, $3,429 or 26%. Again, like Microsoft, with this VOO, I dollar cost average in. So it means the more I'm obviously buying in, the higher my average buy price is getting. But my goal, which I've stated all year, was to get it to 50% of my portfolio weight. And after I sold out of some of my other positions and I allocated that to VOO, it's now sitting at 52%. So it's hit that goal. Gives me a bit of leeway for when I invest next into one of my other positions. So I still keep it around that 50% range. Because like I've mentioned lots of times, because I'm young, I still have a longer investment horizon ahead of me. So I still want to invest in stocks I believe in. I think it's fun. It gives me a bit of a balance. It gives me something to do videos on as well for this channel. Whereas if I was just investing in VOO, it might get a bit boring. But I still think long-term investing in the overall market is a smart decision, especially as I don't see myself, like I said, being a trader or trying to capitalize on short-term gains. I've held this portfolio when I was 20% in the red, and I plan to hold it long into the future. So having some exposure to the overall market and being diversified helps me sleep a bit better at night, knowing that if something was to happen to one of my stocks, there's still hopefully 499 ones in the S&P that can help balance that out. But it does also mean larger dividends. I think I got my first ever plus or over $50 dividend for my stake portfolio. Obviously my Vanguard portfolio pays a bit bigger dividends, but yeah, I'm not a dividend investor, but it is nice to still get that, and I'll track that, and I'll show you on the Excel spreadsheet a bit later how my dividends are tracking. Overall, it will be good to get this to over $50,000 before the end of the year. That'd be a big goal of mine. I'm getting close now at 47,122, but the AUD has gained a little bit of strength against the USD recently. It's still a lot weaker, but that kind of affects how my portfolios are weighted because this is in USD. But yeah, getting that to 50K will be a big goal of mine. Having a look at my Vanguard portfolio, again, a goal was to get this to 30 grand. I've now broken that, which is good. And hopefully by the end of the year, I can get it to $35,000. That would be quite nice. But getting both of those portfolios up means I'm really going to have to put in the effort these last few months. I'm going to be starting a new job as well, so higher pay. So hopefully I can allocate a decent chunk of funds and get these stock portfolios to over $85,000 collectively. Having a look, you can see I still hold the same two positions. VLC, which tracks the Australian Large Companies ETF, and that's sitting at around $82. It's had a good, strong return this last year. If you've had a look at any of the Australian stocks, you would have seen basically all the big banks are massively in the green. Like Westpac, for example, was up big, Commonwealth, ANZ, NAB. And then you look at some of the others like BHP, I believe, has had a bit of a rough year, so it's kind of balanced it out. And I get quarterly distributions from this account, and I just reinvest everything. So yeah, 23% as an ETF, that's very strong returns, which does make you believe potentially next year might be a bit of a slower year, just naturally how things trade. But hopefully it will be a good year and I can keep growing this portfolio and get it to 50,000. That's kind of the bigger goal in the long term, but that will be next year's goal, definitely, to get it to 50,000. If I keep doing what I'm doing, I'll definitely be able to get it there pretty easily. This is a month, like I mentioned, October, when I do get my quarterly distributions. I think this is only one of them, of the dividends out of the two. Don't know which one it is, but my goal was to hopefully get this to over $250 worth of dividends this quarter, because my dividends were a bit small this year than I expected, but I can't complain. Again, I'm not a dividend investor, and especially at this age, I'm more focused on capital appreciation, so capital gains. which is what I'm aiming to do. I was actually learning something interesting in my university classes about home bias and how investors are overly invested into their own company. Into their own country. Even if you look at globally, you can look at different countries and see, I guess it's probably to do with people being more confident and comfortable with the companies that are in their country. But lots of investors are overly invested into their own stock market, even though it might take up a very small portion of the global outlook. And that's one of the reasons why I'm aiming to grow this position, which is my Vanguard International Shares ETF. This has a much bigger global outlook. You can see it still had a great return this year, 23%, and like my other position, it does quarterly distributions. But what this looks in as is 1,500 companies from developed countries excluding Australia worldwide, so US, Japan, UK, Canada, France, Switzerland, to name a few. And what this does is really give me some proper diversification between my stock holdings in Australia, my global ones I get through this, and then my stake portfolio, which looks at just American companies. This is heavily weighted towards American companies as well, but it does give me some kind of like a range into some other countries as well. So I plan to keep investing into that. That's what that $500 is going towards as well. So hopefully I can get that to 20 grand. And again, the goal of this Vanguard portfolio was to hopefully go towards my long-term outlook, whether I'm going to use some of these funds maybe to buy a house or just keep them steady sitting in there till retirement, who knows. But this is a bit more of a long-term outlook. I don't really track this with my shorts or as much as my YouTube as I do with my stake portfolio. My stake portfolio I do a lot more videos on just because of the holdings. They're a lot more common, popular names, so they do a bit better. And I'm a bit more of a stock picker in this portfolio. Having a quick look through my Excel spreadsheet, what this does is just give a bit better of a view of how my portfolios are looking weighted wise. Obviously it doesn't have my recent money I put into my Australian portfolio yet because I haven't settled that purchase. But you can see with my other ones, you can see VOO is well over 50% now. And these two graphs at the bottom show how the portfolio has been tracking over the past year, 2 years, nearly 3 years. And you can see last month was actually my first month in ages where my stake portfolio actually went down in value. So it went from 46,958 to 46,455. So you can see it's gone over that again now, 47. But at the end of the month or start of the month when I get those figures down, it was actually down, which was quite disappointing, but I didn't put any money in, to be fair. But when you compare it to my Vanguard portfolio, that had a big month straight up, went from 29,381 to 31,477. So you can see I put my money into my Vanguard portfolio instead of my stake one. But yeah, this hopefully just kind of shows people a bit more how everything is split up, and it gives me a bit of a more of a long-term view when I look at the portfolios about how they've been gaining. Because like I said, you put money in and sometimes you don't really see the long-term outlook or the effect, but when you put it on a graph, you can really see how that consistently dollar cost averaging has really benefited my portfolios and overall taking me closer to hitting that big $100,000 mark. Having a look at my dividends, nothing really has been put in for this month, obviously, because it just started, but last month I got around $10.34 USD from my stake. But this month will hopefully be a bigger month in terms of distributions, because I get that VOO one and then I get all my Vanguard ones. So the goal for this year was to get over $1,000 in dividends. I think I might just miss it, which is a bit disappointing because I thought I'd definitely be well over that when I saw how big my dividend was last year, that 238, and my portfolio value's grown a lot. But hopefully I can, depending on how big that dividend ends up being, get over $1,000 in dividends this year. That'd be a nice goal of mine to tick off, and I am pretty close to it. But overall, having a look at the portfolios again, getting close to hitting that $80,000 mark, and I plan on keep doing these videos and updating my viewers. We're getting close to 850 subscribers. I haven't really been uploading videos. I think I took a bit of a break just because of how busy I've been with university and work. But now I had a bit of time, so I decided to just do a bit of a portfolio update and keep things up to track. I am probably going to do a bit of a review into my channel just to see what's working and what's not, just to see what I can focus on But I plan on doing these stock portfolio updates, whether they end up being monthly or weekly like they have been. But I just wanted to keep you guys in the loop, because it's nice to look back on as well and see how my portfolio is going from my first videos to a year ago to now. And it's just good to keep track of. But that's all for now, and I'll see you guys in the next one. Cheers.